Chapter 10, the final chapter, Risk Management and Putting the Whole Course Together. Everything we've learned means nothing without this. The first job of an investor is not to make money, it is to not go broke. Survival first. Here are the survival rules, the discipline the 91% ignored. 1. Risk only 1 to 2% of your total capital on any single trade. Then even 10 losses in a row cannot ruin you. This one rule separates survivors from casualties. 2. Always use a stop loss on any leveraged or active position. Decide, before you enter, where you are wrong and will exit. No exceptions, especially in futures and options. 3. Diversify across sectors and across asset classes. Equities, some debt, a little gold. When one zigs, another zags. 4. Never mix your investing capital with your trading capital. Keep the long-term wealth pot completely separate from the money you actively trade. 5. Never borrow money or use margin trading leverage to chase returns. Remember the 91%, leverage is what turned their losses catastrophic. Follow these 5, and you will still be standing when opportunity comes. So which of all these tools is for you? Match the instrument to yourself, honestly. If you are a beginner or a long-term investor, your toolkit is simple and powerful, an index SIP plus a few quality stocks, aimed at long-term wealth, needing just a few hours a month. Futures and options? Not yet, you don't need them. If you are experienced, you can add hedging, using futures to protect your portfolio while your core stays invested for growth with weekly research. Here F&O earns its place in small size, mainly for protection. Only the dedicated, near full-time trader with a tested method and iron discipline should run active options strategies and trade commodities. And even then, only with strict risk rules. There is no shame in the first column. It quietly builds more wealth for more people than the third ever will. Let's bring the entire course together in one breath. Start with the sector, top down, from macro to sector to the leaders within it. Research properly, the 3 statements, the key ratios, the moat, and always a fair price with a margin of safety. Learn from methods and trustworthy channels, varsity, honest educators, seasoned fund managers, and never from tips. For equity strategy, an index SIP and a few quality names serve most people beautifully, even though you now know them all. Futures and options are powerful tools, use them to hedge first, and never forget that 91% of speculators lose. In commodities, let gold be a 5 to 10% hedge, and always respect the leverage. And binding it all, the risk rules that keep you in the game. Survival first, returns second. You now have the complete map. Learn deeply, risk little, and compound patiently. That is how wealth is truly built. This is educational content, not investment advice. Do your own research and consult a SEBI-registered advisor. Thank you for watching.